see, we have seven participants live at the moment. Let's see, let's wait until 5 after to see how many more people we have.
Are we running Hmong time?
We always run one time. It's always 5 after.
Okay.
5, sometimes 10 after.
We go refill my coffee then.
Yep. Hey guys, if for all you guys that are just joining, we're waiting till like 5 after. So feel free to just talk and small talk as we wait. What we could probably do is as we wait, we'll look at ES, the S&P E-minis. What's up, Kevin? Yeah, so the futures sort of seen this pattern. And that's why when it went up Friday, I was like, we shouldn't really cheer yet. We're not out of the woods.
393 tomorrow morning.
I don't know. Usually it'll be like a back and forth. So probably drop to as low as within like Monday or Tuesday, probably get to as low as maybe 375 to 76, maybe 378. And then once from there, probably gonna see it. If it can get any traction with this upward movement, it'll probably bounce back up. So I'll always do this like this little stair step thing going up. Same thing with going down. You see, it's never just a straight down. It's always a stair step pattern up and down. This is the hourly, by the way. Good evening, guys. All right, let's give one or two more minutes. I'm gonna run and get my other headphone. All right, let's. I think this is all the people that's going to be joining. I don't see any more, so we're just going to start. It's a little bit after 5 after, so whoever is going to join us later, they can join in and then just follow along. But tonight's session is going to be going over how to be consistent with trading. So that definitely is a topic that needs some light shine on it, because a lot of beginners, we keep telling them, you got to be consistent, but we don't really tell them how you can be consistent. Okay, so as we're going through this, feel free to, if you have any questions, feel free to just ask away. This is going to be a pretty informal thing, so don't feel like you have to wait until the end to to see or not to see, but to ask any questions and see what we have to answer. Okay, so let's begin. So the first step of being a consistent trader or getting to a consistent status is to first have a defined strategy. You know, as a trader, you shouldn't be entering the market blindly, meaning, you can't, because if you do that, then it's always just a guess of what's the outcome going to be. Because a strategy should define for you how likely you are to be making a profit and by how much. You know, the numbers, they might not be exact, but they give you a ballpark estimate of what can you expect at the end of the year. And that's what we call an edge in the market. So that strategy, you have to have it on paper also. You can't just have it in your mind and just be say, it's in my mind. That's already set. It's good to go. No, you have to have it on paper and you have to follow it. A lot of new traders, they have a sort of strategy defined. They don't have it on paper. They have it in their mind. They have how they think they want to enter into the market, but they don't. And then they also don't follow it to an exact T. What they do is they follow when they want to, and then when they don't want to, or when the market is going against them, they don't follow that strategy at all. Now, strategy should be followed in neither a bull market or a bear market. You shouldn't really have to change it. You could evolve it. It could evolve, but you shouldn't be changing it when it's under pressure. You should be slowly thinking about it and keeping a record of how that strategy is doing. So, um, and a lot of newbies when they join or they start trading, they like to strategy hop. They never really give a strategy enough time to show how it's gonna perform before they hop to the new strategy. They hear that, hey, the strategy is gonna make me a lot of money, then I'm gonna hop to it. Or they hear somebody's doing better and using a different strategy, and then they hop right to that one. Now that completely defeats the purpose of having a strategy or having a defined strategy, because you're just hopping from one thing to another. You never really know the full outcome of it. Okay? So our next slide, so here are just some points that you guys should keep in mind when you are trying to define your strategy. So a strategy, it should tell you when you should be entering positions, where you should be exiting, and your conditions for your exit, how much you should be risking for each position, and most importantly, and this is the hardest point for not only newbie traders but even experienced trader, we have this tendency to continue trade even though the time might not be right for us, right? So our strategy should always try to tell us when we should stop trading. We should walk away, take a few weeks off from the market, because the market will always be there. Okay, so let's expand onto each of these points a little bit more. So into these points, entering a position. What do I mean by that? Well, when you have a strategy, most of the time, if you're a trader, um, most of the time you're going to be using technical analysis, right? So entering into a trade, you need to define what technicals you're going to be using. Under those technicals, what time frames do those technicals apply to? And then you also look, if you are going off of the company's fundamentals, you need to put that into consideration. Maybe you're looking at things like short ratio or share floats or market cap. Things like that you have to define ahead of time that you should be looking at before you enter into a position. And then for stops, before you even enter a trade, your strategy should define your where your stop loss areas would be, or if you're going to be using a trailing stop, and uh, and if your strategy allows for it, where your profit targets are going to be. Because it's a lot easier once you know a place that price has to be to aim for those than to just get in there and say, okay, if I make money, then I exit. What's going to happen is as you're trading live market, if you don't have a clear exit in mind ahead of time, you're going to give into your greed. You're going to give into your emotions. You're going to see a run that just too good. And you're going to forget about getting out. So that's why you need to have an exit defined ahead of time, areas where you're going to exit. And when you do exit, stay out, until your strategy says, hey, it's good time to get into this position again. Or once you exit, maybe look for some other stuff. But you should be doing this homework before you enter a position. And risk, to expand upon risk, before entering into any position, you should always be defining how much you're willing to lose ahead of time. I know we never really like to talk about losses when we're trading, but it's a reality that no matter how good of a trader you are, you will always have some losses. And it's your job as a trader to define how much you're willing to lose. Right. So you're not gonna be so if you're gonna be into a position, you gotta define it. Is it gonna be 50% of your account? Is it 25, 10, 5, or 2? And especially when we have a market that's uh, been as red as what we've seen in the last 2 weeks, is when you really need to define those risks. 'Cause you can't just enter into the market and hope that someday you're going to make money. Because what if those stocks never come back? Then you're going to be down a lot of money. Your whole position can be wiped out. And if you add the risk of margin on top of that, that's even worse. So define your risk. And if you are a newbie trader, my recommendation is that you go with no more than 2% of your account per position. If you have $1,000 account, you're risking no more than $20 per trade. Not saying you have to only trade $20, but you can only risk $20. Okay. And then our last point, the most important point, is when to stop trading. Because in this game of trading, you can only make money if you survive long enough to make money. You can't, you can't, you can't make any money if you have nothing left. So if you're getting stopped out so many times in a row, you should know when to call it a day. Step up from your computer and maybe go and do something else, because the market will always be there. But if you keep losing and you keep getting into the habit of revenge trading, your capital is not going to be there. And when those good trades open up again, you're going to be out. So know when to stop trading. And you could do this, a certain percentage of your account loss per week will kick you out of that the market for that week, or you could do it on a monthly. Me personally, if I'm down more than 6% on my portfolio in a month, I walk away. I said, no matter what I have on the what I positions I have, uh, it's gonna be done, right? And I'm gonna get up, and then we're gonna, for the next couple of weeks, however long that month is, or what's left of that month, I will just be looking at the market and planning trades for next month. And that's how you can keep yourself in the market long enough to get into those great trades. Now, I'm hoping that you guys are a little bit interactive tonight. So I'm going to ask the audience, um, of you guys, I don't know how much experience some of you have, but do you guys have a strategy that's defined ahead of time when you trade? Anybody could answer answer. Kevin, how about you?
Hey, Kang. Yeah, to be honest, sometimes I don't have a defined strategy. There are certain times where I do plan, okay, this is when I'm getting in. This is, where my profit target is. This is how much I'm willing to lose. But, more times than not, I try to let things ride and see where it goes. So I'm probably the example of what not to be, based on what you're talking about.
And as a new trader, we're not going to hold you to know all this stuff because it's completely new behavior. It's a completely new habit that you're going to have to form. So it's a good thing that you can admit that, because a lot of new traders, they have a hard time admitting that they need help, admitting that they need to do stuff. So I challenge you within the next month or even the next week, as you're trading, I want you to start thinking about this, and better yet, start writing it down. And the more you follow it, your strategy, and follow it to a T, meaning that you don't get into a position without first consulting your strategy, and then when you get out, consult your strategy also. So I challenge you, and not only you, but all the members that are here that are wanting to learn and wanting to step up their trading game. I encourage you guys to really define your strategy and really make yourself trade by it. Okay, so having a repeat, having a defined strategy is what's going to help you stay consistent. Okay, so this next point, along with having a strategy, you guys need to. Well, I'm not going to say you guys need to. You have to, and if you want to be a good trader, start start trade journaling. I know some people, they say oh man, that's just too much work. That's just going to slow me down. At first, you're going to be slow. You're going to be slow at trading until all of this becomes a habit to you. Then that's when you can stop your trade journaling, because you're going to be doing the same thing day in and day out. Your trade journal is going to be the same thing, the same entry, well, similar entry. So I really encourage people to trade journal. And what is, when we talk about trade journaling, well, a lot of newbies might not know what we're referring to. So, I do have examples of things that you should be putting in your trade journal. And so that when you do it, it's to your advantage. Because what trade journaling allows you to do is to, at the current moment, it's not going to have too much meaning, but maybe 3-4 months down the line, you're going to look back at your entries and your trades, and you're going to say, oh man, I have learned this much already. And, I was doing these stupid mistakes. I got to make a note, and I have to change that behavior so I don't keep doing that. Where I noticed that every one of my trades that have X and Y technicals, if I enter on it, I always end up losing. So maybe that's a trade where you should avoid. If you see something like that again, you should avoid it. Right. So these points, let's quickly go over them. For your trade journaling, for every entry, you should be writing down what your entry is. That means what the stock price is, or stock prices. Maybe there's a news event, something like that. Your exit. If you got stopped out in that position, or if that position hit a profit target, or or goes even above that, and you get out. If it was manual or automatic exits, you should be noting that down. Dates, you have to really, really note that down. I know it sounds really easy, but some people forget to note the date of their entries, or their the journal entries. And you want to have that date so you can look back and maybe look through the news or something to find what was the catalyst for a certain move. And then the next thing you have to put down is your mood, because as trader we are humans, right? Our moods affect uh, our trading. So you have to put that down. How you're feeling, your thoughts. What are you thinking about the market at the time? Maybe you're angry. Maybe you're upset. Maybe you just have a recent death in the family that's weighing on your mind, or maybe somebody, maybe you broke up with your girlfriend, or you're going through a divorce. Things like that that could really affect your trading. That you should be journaling down. And when you in the future, since we're all human, we're gonna go through so many events in our life, and then that could be one of your reasons to why you should stop trading for that moment of time. Not for good, but just for that moment of time until you get into a cool head and you're back to your normal self. The next thing is all the time frames that you are looking at. Now, for day trading, trade journaling is really gonna limit you because you're gonna have to be doing all this as you're day trading. So that's why we don't recommend starting with day trading, because you don't if you're entering the market so fast, you don't have time to put this down. If you something you don't track, you're never going to grow from. You're never going to learn to analyze it. You're never going to build the metrics. So slow down your trading. There's always money to be made. Slow down your trading, get good first, do all your metrics, do all your trade journal, even if it sounds dumb right now. Force yourself to do this, because if you want to level up your trading, all the every top trader will tell you that trade journal is important. And also keep track of all the technicals that you're using. Don't jump from one to another too fast. And your trade journal should be keeping track of what the TAs that you're using, because you're gonna find that as you evolve as a trader, certain technicals you understand more than others, and you see how they work. And so having that in your journal will tell you how you are seeing the market. And eventually you're going to be able to, um, paint this picture of when you look at charts or when you look at stocks of what the price is going to do over time. You're going to be able to become predictive instead of reactive. So I hope that you guys have a pretty good understanding of trade journaling. If not, feel free to ask questions. Don't be shy. The more questions you ask, the better. Let me pull up the chart. So, Kachu, you asked about what's TAU. So TA is technical analysis. So like your moving average, your MACD, your RSI. That's what you should be doing. All right. So, doesn't look like we have any more questions. I'm gonna quickly check over on the Facebook Live to see if we have anything. Yeah, and I believe one of the users says they take a quick screenshot of what they're doing, and that's a good way to do that too. Taking a screenshot of your charts. Yeah, taking a screenshot of your charts, and then from your charts, gluing that. It could be something as simple as an Excel sheet that you link that to. Trade journaling doesn't have to be some expensive software. It could be as when I first started, it was as simple as a notepad. I would just jot it down. Then I moved from there. I moved to an Excel sheet. It was just a simple Excel sheet. Just has dates, entries, exit, uh, uh, my technicals that I use, a quick thought of, hey, where did I think that the trade was going to go, so that when I would look back at it, I would understand. Okay. So if there's no more questions, I want to I'm going to move on to the next slide. All right. So this slide, 80-20. And what does this mean? So if you guys pay attention, this ratio appears everywhere. You can apply it to the workplace, you can apply it to trading, you can apply it to the world. Well, not really the US economy now because it's more of a 95 to like 15, but, well, 95 to 5. But what it just means is, in short, and you apply this to trading, it means that 80% of your profits are going to come from only 20% of your trades. So doing less sometimes is more. And this ratio links back to our trade journaling and our idea of having a defined strategy ahead of time. Because when you look back at your journaling and you look back at all your history, your trade entries, and all your trades throughout the year, you should be asking yourself, or you should be looking and seeing how much profit you've made and what percentage of those trades, are you making a profit? And I bet you it's going to be close to this ratio. 80% of your profit is only going to be coming from 20% of your trades because the market doesn't trend all the time. You know, yes, if you're a day trader, it might be a little bit more because you're trading more, but it's going to be pretty damn close to this 80-20. So you should be doing that too. And if you're trading a little less, it also gives you more free time. You know, you could, if you know that 80% of your profit is coming from only 20% of your trades, you could limit down on all those bad trades, you know, wipe them off. And every year you should say, you should be taking 20% of your trades that are making money and doing more of those. And as you do that, you become more consistent and your gains will be continue to grow because you're limiting down on the bad things, your bad habits. Eventually, you're going to cut them all out and get to a point where you're completely uh, completely comfortable with your trades that you know where your profits come from. And every year, at the end of the year, do this analysis of all your trades and see where your ratio is. Are you close to this 80-20? Or is it 50-50? Or maybe it's even the opposite. 20% of your profit is coming from 80% of your trades or however the ratio is. Do this and do more of what's making you money and do less of what's making you lose money. Now, I don't know if since Zong has been trading for even longer than I have, I don't know if he has anything to add to this 80-20 or if he's seen it.
A lot of things that I learn is just from experience, but like I mean, 80% of your profits come from 20% of your wins. I know that terminology, but you know, there's one good thing about learning from experience is you kind of can recognize things, but you have no idea if there's a term for it or if you guys get what I'm saying, right? You've been in the market and you see things and you're like, oh, okay, these things repeat, and you make your own terminology for it, right? Like Friday, we got the check mark, right? And I don't know if there's, I just made that up. I don't know if there's an actual, um, if there's an actual name for that kind of pattern, right? So, sometimes you hear me say things and you're like, what? Like apple bottom, right? Nobody knows what an apple bottom is, just, but I guess you can compare it to like a George Washington or like a double bottom, you know. But yeah, 80-20 basically, yeah, correct me if I'm wrong, right? 80% of your winning trade or 80% of your profit comes from 20% of your winning trades.
Yep. Yep. That's exactly. And this ratio occurs a lot of places, like even the workforce. 80% of the work is done by 20% of the people at the company, right? Or 80% of the world's wealth is held by 20% of the people. Well, right now that's like 15% of the people. 80% of the wealth is held by 15% of the people. So this ratio occurs a lot, and you see this happening. Most people just don't know about it, but there's a good book on this ratio that I wanted to share with you guys too. Unfortunately, I don't have a slide up for it, but if you guys are lazy like me, I encourage you guys to check out this book. It's on Audible, and it's called The 80/20 Principle by Richard Cross. And it just shows you that 80% of a lot of examples of where this 80/20 rule applies, and how you can do less work but and still achieve the same amount of results. So how it applies to trading is you trade less and you still get the same amount of profits at the end of the year. So anybody have any questions about this? We have a quiet crowd tonight. Well, that's pretty much it. And so I'm going to be accepting invisible half pies from everybody. Um, so yeah, just to recap everything, to be consistent, a consistent trader, you need to first have a defined strategy that you follow, and you follow it to a T. And you need to start trade journaling. And once you have a defined strategy and you start trade journaling, start looking at how you can limit on your bad trades. Remember the 80/20 rule. And start limiting all your bad trades and start doing more of your good trades. So don't be afraid to go slow. When you go slow, you can keep track of your metrics, and something that you keep track of, you can improve upon. And all trading is this cycle of learning, doing, reviewing, and repeating. There is no magic to trading. Very good traders, successful traders, they make it look like magic. They've been doing it for so long that it's second nature to them. So I encourage you guys to slow down. If you're a new trader, slow down on your trading. Quit thinking about the fast money. Start thinking about how you can do this to become that successful trader, to become financially free, to become the person that you want to be, a person that doesn't have to work for anybody anymore, that you can retire and know that there will always be money coming from the market, that you can always be grabbing money from the people who are impatient and put it in your pocket, exchanging that wealth. Okay, so don't be afraid to go slow, because what you should really be afraid of is being taken out of the game in this trading game, right? You go too fast, you crash and burn. And once you crash and burn, you're either going to be too afraid to enter again, or you're going to say the market is a scam and walk away and never really learn how to use your money to work for you. So I hope you guys learned something from this little session here, and start employing it to your trading. Yeah. And so from the live comments, I see something from Wayne, and he said, and it's exactly like you said it, Wayne. Consistency is key. Consistency over quickness, quick money. Who cares if you can make $100,000 in one night? If you can't reproduce it, that $100,000 is as good as gone. So slow it down. That money will come as long as you know how to get it. But I hope that everybody learned from this little lecture. Pretty much, if there's no any questions or anything about it, that pretty much sums up this part of the session, and we can go and look at charts and stuff now. So we're going to be like taking some questions.
Let me
And-
add some things. Okay.
Yeah, go ahead.
When if someone's coming new and you're like, you tell them define a strategy, right? They're not going to know how to define a strategy. When you're new, you're gonna trade a bunch of strategies. You're gonna trade a bunch of things, right? When you have a good enough, number of trades, right? You go back and see which ones are the winning trades and which ones are the losing trades, and you see what kind of strategy or what kind of setups work for you the best, right? So you try to work on just those winning trades, right? Finding those setups, and work on those, get those stronger to where you're consistently winning with those, right? Because if you don't go back and look at your trades, you're not going to see it, right? Just like you never owned a Toyota Corolla, right? As soon as you buy a Toyota Corolla, you see them everywhere on the road. So find your winning trades, see them, and see why those are winners, and see the pattern, right? And then once you start seeing those patterns on the trades that you have won, and then when you see it on the market, you'll notice them, right? And the more and more you trade those same setups or patterns, the more you'll see them, and they become easier and easier to see. So that's all. You got to take a lot. You got to take a lot of losses when you're starting out, just to try different strategies and stuff like that. But once you have enough, you go back and from all those that you did, and then whichever ones that you're the best at, just keep those.
I guess to even add on more onto what you just said is also, that in itself is that in itself is a strategy too. The strategy of trying all strategies. Because you don't want to blow up, right? Because at the very start of anybody's trading journey, they're not gonna have an understanding of what to do, and they're not gonna have an understanding of how much to do it, right? So, I mean, at the very start of it, I would recommend that new traders don't focus on the profit. Focus on just seeing how that trade will play through. And if you're looking for any strategy, right, or any technicals to really to really use or to employ, just go, you can YouTube something up real quick, or we can even tell you, the most common ones that people use is the MACD with the RSI, and after that, there's the moving averages, and those are the basis for most strategies already. So within your trading career, you will notice that all of those technicals come up over and over. So you already have 80% of a strategy or the technical analysis know-how for what you're gonna do for your trading career. Is near the MACD. You're gonna use the MACD, the RSI, or the moving averages. Those three, and you can use different variations of the moving averages. The 200 is the most common one that people look at. You can use the 9, the 21, the 50, 12, the 100, you name it. So just picking those, but go slow at it. There is no beginner that is gonna make that is gonna just hit home runs all the time. You're gonna hit one home run and then you're gonna try and reproduce it. And that's why it's important to record everything so that you can learn, you can go back and dissect it as you have more knowledge of the market. Because what we can do for you is we can tell you that, hey, there are these strategies out there, that there are these technicals out there that you could use, but for you to truly understand it, we can't do that for you. We can't make you understand something. We can teach you the different technicals and the different terminologies and the different patterns, but we can't make you understand it. And that's where your work as a trader begins, is, how do you survive long enough to understand everything fully? And probably the key thing is to go slow and to go small.
Say a couple of things I want to add.
Mhm.
Yeah, I I would recommend to all new traders and things like that. I mean, if you're gonna trade, I mean, you're playing with money, and you have to really know what you're doing. So, I mean, at a minimum, you got to do some research. At minimum, some YouTubes and things of that nature. When I started out, I probably spent almost maybe $20,000-$30,000 going to trade schools, going to trade seminars, conferences in Miami, Las Vegas, San Francisco, and things like that. I started out as a fundamental trader, so I would look at fundamentals, and I would usually just go long. But as I see my portfolio grow, and I know that there's money to be made if you day trade or if you swing trade. But that requires some skills because you're timing the market, top, bottoms, or certain dips or pullbacks and things of that nature, and stuff like that. So, I mean, just spending a couple of $1,000s to go to a school and learn um, some fundamental analysis, technical analysis, and things like that, it's going to really help before you actually just open up an account and say, start trading and things like that. And so I took my first trade back in 2008, right around the Delta Northwest merger. I did a little of that, and then I kind of got too busy with business and things like that. I mean, I really came back about 2014, 13, when Bitcoin was about maybe under $300-$400 and things like that, and really went back to educate myself. And I was looking at Kang's presentation and all of these things, and I could just relate to just having a strategy. Everything else, if you do enough of it, I don't keep a trade journal. A lot of time, my trades, maybe it's not the 20 trades that make me the most money. It's actually the 80 trades that I make more money, and I lost 20. Great. Sometimes I do maybe 10 trade in a day, and I might win 8, out of the 10 trades. Or I might win 5 out of the 5 trades. Or I might win 3, out of 10 trades. And sometimes I can relate to, okay, I do 10 trades. Sometimes the 2 trades that I made really run, so I write that. And so with certain risk management, I actually won more in 2 trades than doing the 8 trades. But the problem is sometimes you don't know which trade is going to be the winner. And so for me, sometimes being pretty busy, I could jump in 10 minutes and look at my scanners and try a few trades, and I would jump in and out, and I take profit from there. And sometimes I might be spending hours on a computer and probably don't trade because I can't find a trade. And so I can really relate to just having a strategy and stick to that strategy. And if you don't see a trade that meet your criteria, you just don't trade. I mean, doesn't matter. You just don't trade until you find a stock, that meet your strategy, and then you jump in, and then you take profit when your strategy says you're out, and things like that. And so I think over the 5, 6, 10 years that I've been trading, with all of these trainings, they teach you so many things, but it really comes down to me now that there's only like a few things that I actually use on my chart. And I used to have all kinds of indicators on my chart, but now it's probably maybe, three indicators on my chart. And sometimes I would spend maybe, if you're really, really serious about it, one of the strategy that I use is it's going to cost you $1,000. And I bought the scripts. It's pretty much like an algorithm where it combines a lot of stuff in there, and it will tell you, it will give you signals and things like that. And I paid $1,000 for it. It's worth it and stuff like that. And so sometimes you could use a lot of these indicators on your chart and pick individuals and learn what you can do with it, what works, what doesn't. But I found a couple of algo that kind of works, and I stick with it. I twig with it, and I play with it so that you feel comfortable, so that you can actually use that to give you better signals and things like that. And so I think that using just one or two, like the CCI, RSI, stochastic, MACD, moving averages, whether it be MA, EMA, whatever the case is. I mean, you can put all that on your chart, but a lot of time it gets pretty messy, and you will find out that sometimes it doesn't work, and things like that. But um, yeah, like I tell people that comes to me, I say that you need to really start slow, learn, and when you know a whole lot more and you lose a lot of money, that's when you get better. And so one of my sisters started trading. I kind of introduced her to trading just like 6 months ago. She got lucky. Start trading options and stuff like that. She got lucky, made about $10,000, and then she got greedy, and then she lost about $15,000. So now I'm saying, see, I told you, slow down. You don't even day trade. You need to pretty much just go long, and so you can see your portfolio grow and learn at the same time, and things like that. And so when I started out, long-term investor, and I started to go into day trading or trading. So when I look at it, it's as an investor, you're going long, but as a trader, you actually trade. And so you could either trade short-term or long-term and things like that. So now for me, majority of my portfolio is long-term, but I have a pretty good size account that I do day trading, swing trading. So I trade stock, equity, I do options, futures, and I do crypto, things like that. And so really, really, number one is just like Kang said, just stick to your strategy. I mean, if you don't have a strategy, you're gonna be all over your chart, all over everywhere. There'll be days where you got a lucky, you got a winner, it's a runner, and you're making a lot of money, and then you think you're good, then the next couple of days you blow your account, things like that. And so you really, really have to narrow down your strategy and stick to that strategy. If you don't see a stock that meet that strategy, I don't care what the news says. I don't care what my buddy says. I don't care what a forum says. This is gonna run. I don't care. I look at my chart. I look at the stock. I'm just saying, well, I'm just gonna pay attention to it. I'm not gonna trade if it doesn't meet my criteria and things like that. So for me, as a day trader, a scalper, I'm a momentum trader, and so I look for momentum in the market. I have certain paid script that will basically give me the signal, and I will trade that, and within a couple of minutes I'm out. But when I go in one lot for a new trade, one lot could be maybe just 100 share, but for me one lot would be 1,000 share. Whether it'll be 1,000 share of a $1 stock or 1,000 share of a 10,000 a $10 or $15 stock. It doesn't matter. I go in one lot, in and out as a day trader, things like that. But if your account is not that big where you're a day trader, you don't have like 30, 40, 50,000 in your account so that you could day trade in and out, things like that, then you really, really have to stick to your strategy, pick your trades, and go in and then go in small. One lot would be 100 share, and play around with it until you feel comfortable, and things like that. So, you got to really, really have a strategy and just stick to it. It doesn't matter what the chart is telling you. When it says, your chart is telling you this is it, you need to get out, you just get out. even though you think it might run or it's still running, you get out, take your profit, and then just come back and wait for another trade and things like that. But one thing that I've, I don't know if you guys are using this, but one thing that I tell people is this: you put on your chart, just put an 8 moving average, a 20 moving average, a 200 moving average on your chart. Okay, those are the three things that you put moving average on your chart. Okay, so that's just one indicator. It's a moving average, but you have just having three on your chart. Put your RSI down there, and my RSI is usually set to 50 and 70. Right? And if you just maybe play around with it, this is the number one strategy that I use is you look at it when the candle is above your 8, above your 20, above your 200. And when the three moving averages are very closely together, just like this, not like when they're spread out like this already and stuff like that. When they're really close together and the candle just basically break above that 20, very likely that's the start of a new trend. And if you back test that strategy all the way back, like 6 months, a year or down, you will see that every time those candles pop above that 20, and that 20 is above the 200, you will see a run. And usually I write the 8 MA, meaning that if the candles are above the 8 MAs, I will keep my trade in. And as soon as it breaks the 8, I might get out. If I'm aggressive, I might stay in and let it break the 8 and see if it'll come down to the 20 and see if it'll find support there. So those three moving average on there, if you just put those three on there and look and back test it, you will see that, I don't trade it when the candle is under the 20. If the candle is trading under the 20 is under the 200, possible short, but I'm not going to long anything there and stuff like that. And over like 6 7 years, I trade all kinds of strategy. And when I look at this, it's just kind of like, wow, this is the most consistent strategy. All of these algorithms that I spent $500, $1,000 buy these, and I have two screens. And when I use the algorithm on this side, I use that on the other side. They pretty much match. When the signal pops over there, I look over here, the candle is above that 20, the 20 is above the 200, and I will write the 8 and things like that. So, you could go on YouTube and find all kinds of things to put on your chart, but, my suggestion is just to put those three simple things on your chart and back test it on your favorite stock, and you will see, when those three moving average are very, very squeezed together and the candle just pop right above that 20 and that 20 just cross right above that 200 and the next candle confirms another green, you jump in that candle, you will get another at least 4 5 6 candle green. And if you are trading the 2 minutes or 5 minute chart, um, if you go in one lot, like $1,000, 1,000 share like me, a lot of time, 50 cents to a dollar will equal to maybe about, depends on how many lots you go in. So size really, matters to me. And so I could be taking anywhere from 1,000 to maybe 3 or 4,000 on a trade. But again, it really depends on the stock too. You must have liquidity, well, it's got to be a very volatile stock and things like that. So you really have to pick your stock. But number one is you got to have a strategy. If you don't have a strategy, you wouldn't know what to trade. If I don't have if I look at a chart right now and without those moving average on there, the 8, the 20, and the 200, I wouldn't know really what to do. I mean, I would see all kinds of candle. I can read the candles. I mean, I know, okay, this is like, it's a doji. Okay, this is a hammer. This is an inverted hammer. I could do that, but really without those moving averages on there, I can't really tell where the stock is going to go unless it's like a 1 day or 1 week chart. Then I can maybe predict it and things like that. But if I'm looking at a 5 minutes or a 2 minutes, I wouldn't have a clue where that thing is going to go and things like that. So that's just my 2 cents. Having a strategy and stick to that strategy It's very important. And finding a strategy that actually, if you do like, if you really just stick to that strategy and you do 20 trades, and of that 20 trades, you look at it to see how many trade you won, how many you lost, and things like that. I could almost say that, for example, do 10 trade, I could probably say that I will win 7 trade and lose 3 if you use that simple moving average on there. But don't trade it if it doesn't meet the criteria. If the candle is not above that 20 and that 20 moving average is not above the 200, don't trade, because if you trade, I'm pretty sure you're not going to win. But if you find that exact, let's say, for example, you use a scanner on TD Ameritrade, right? You set up your scanner to alert you when any stock, the 20 crosses over, the 200 to the upside, maybe on a 2-minute chart, and also add, the RSI just cross 70, okay? You will see a stop that will meet the candle will be above that 20, and that 20 probably will likely be above that 200, and the RSI, because it crosses the 70, it's just about to pop. It's usually when I catch it though on my scanner, I go in, and if it meets my criteria, I go in 1 lot, 2 lot, or 3 lot, and that thing pops in about 2-3 candles, which is only about 4 to 6 minutes. I'll be out with, between 1,000 to about 3,000. Really depends on how things play out and things like that. So that's just my 2 cents. So
Well, Thomas, this is great. Thanks for sharing. It's definitely great advice that you are giving, and you know, uh, yeah, it goes back to what we said earlier in this presentation: having a defined strategy and following it, and not doing anything if that strategy doesn't tell you to, right? And trusting it, right? So, thank you for coming in and giving your 2 cents. To you it might be 2 cents, but to me, or I can't speak for the rest of them, but to me, it's worth a lot more. So, definitely thank you.
Yeah,
yeah,
thanks for
sure.
sharing your experience, Thomas.
About the Hmong investors community and stuff like that. I mean, for a long time, I've been on Facebook and things like that. I have a little Telegram chat where we have about 25 members, and we talk every day on that and stuff like that. But I didn't know that there's this, Hmong investors community or that Hmong traders group on Facebook. It was just like since I think it was just yesterday that somebody sent me something, say, hey, take a look at this. And then I look at this, I wow, the Hmong investors community, there's like almost about 3,000 on there. So I joined yesterday and stuff like that. But I'm happy. I mean, I don't know, I've been talking to a lot of people, my brothers, sisters, and even my parents, and trying to convince them to put the money in the stock market and things like that. You can't make any money putting your money in the bank or having a CD or money market or things like that. I mean, yeah, you could just put it in the ETF or something where you could at least make 5 to about 15% every year APY. Why would you put your money under the mattress or in the bank and things like that? With inflation, you're not really actually making anything at all. You're actually paying the bank to hold your money there and stuff. So forums like this, it really kind of open people's eyes, and I think the Hmong people really needs to pay more attention to investing their money. I think that I think a lot of people say, hey, investing in the stock market, that's like gambling, but it's not. I mean, it doesn't equal to gambling at a casino or playing poker or anything like that. I mean, it is a form of gambling, because anytime you bet on things that in the future it's gonna appreciate and you're gonna make some money, that's betting. So it's somewhat a gamble. But if you look at history back in time, you will know, like, oh, Apple stock, Amazon stock, Microsoft stocks, 10 years, 20 years is always grow. And so if you think in the next 10 years everything's going to crash, well, by the time it crash, I mean, if you think it's going to crash, I mean, your money in the bank is going to be worthless anyway. If everything crashes and stuff like that, we have a huge recession, and You know, if you look outside, people be killing each other. So, you know, your money is not worth anything at all. And so I've been telling a lot of people that I know around me about investing your money, making your money work for you. And also, I don't know about the group and age wise and things like that, but when 40 and 50, we start thinking about building, you know, generational wealth where pretty much we're going to be gone soon. And we want to make sure that our kids, um, you know, we leave something behind and things like that. Because when I grew up, you know, my parents don't have any money and stuff like that. So there's just so many things about it, but this is the kind of forum that we can have people engage and be exposed to investing, whether they are long term or they are day trader and things like that. So I'm happy to be a part of it and stuff.
We're happy to have you. And if you if you're not aware, we have a Discord group too. So feel free to come join us in there. You know, we talk in there basically every day. We have a voice channel and a chat and a text channel that we're constantly talking. So feel free to it's also free too. So everything we do is pretty much free. Feel free to let anybody that you know will be interested in and come chat with us. You know, share ideas. We'll continue to grow. So uh, so yeah. Okay. So let's see. Let me check. See if there's any questions. So Lau asked you, Thomas. What time frames do you usually look at?
When I trade, as a scalper or day trader, usually trade for 2 minutes or 5 minutes, right? So a lot of time, some of my buddies like, okay, if your scanner, you know, if it pop up a really good trade, you know, text me. So I said, fine, you know. And so usually when I find you know, a trade, I will, you know, basically, you know, it pops up my scanner. I take a look at the chart quickly. He meets it. I put it in my order. I text my buddy, right? And by the time I text him, he look at his chart. I'm already jumping out already, taking the profit because a lot of time these scanners are scanning for momentum and things like that. I think a lot of time, if you're a long-term, you know, investor, don't pay attention to the noise. Okay? A lot of these things, you know, a lot of these noise of the news and things like that eventually will cause the stock to go up and down, you know, things like that. But if you're talking about scalping or day trading, I'm looking at sometimes the 1 minute, 2 minutes, and 5 minutes. I will look at maybe the 30 minutes, maybe an hour, just to kind of have a overview of where things might go. But then I go back to my 2 minutes and things like that. And the reason is because, you know, the longer the period, you'll miss, you know, in that one candle. If you look at a 1 hour candle, okay, there's a lot of information that you're missing unless you're going long or you're swinging in it. It's a different story. But if you're gonna scalp a day trade, you can't be looking at a 1 hour chart and go from there, or even a 30-minute chart, or even a 15-minute chart and trade that chart, right? When I'm talking about scalping or day trading, I'm talking about in and out, probably 2, 4, or 6 candle, 2 minutes, and I'm out. Because a lot of time you will see this, okay? You know, based on my experience, okay, all of these indicators, if you look at it, there's not just like 100, there's thousands of indicators and techniques and strategy out there for all of us to use. Well, why are we not making money? Why are we losing, kind of a thing? And a lot of time, a lot of these things are, you know, that they taught us to look at to trade. There actually doesn't matter. Like if you're looking at Fibonacci, you're looking at this, you're looking at that, you're looking at MACD, you're looking at divergence, you're looking at all of these things, and they tell you what each does and what each of those indicator means, but you're not making money. How come you're not making money? I'm not making it. That person's not making money. But a lot of time, if you look at the candle will tell you the amount of money that's flowing into that candle. Okay. And a lot of time as retail trader, you and I, using our phone, using our laptop, using our computer, we're not fast enough to put in a lot of those orders. Okay. If you see a lot of those like huge boom candle like that, That's institutional, the smart money of buying and pumping that stock and coming in. And it's just kind of like Wall Street bets. If everybody goes in at the same time, you can do that kind of pump. But on a normal, neutral, natural, flow of things, you won't see those things stop. And so for me, when I scan for those things, you will see a period of maybe consolidation, maybe accumulation, distribution area, and then suddenly, boom, and then another boom, kind of a thing. Right? And so that's what I'm trying to find on a 2 minutes chart or on my scanner. I get in and then I just get out. I mean, I don't stay very long in my day trades or when I'm scalping, and things like that. Because I think a lot of time, one of my algorithm that I use that cost me maybe about $700, okay, that you could plug that into maybe NinjaTrader, okay, that if you trade futures and things like that, they measure certain things like the they measure the money flow, the speed that it comes into the market and stuff like that. And so it's trying to measure how fast those orders are coming into the market at that time in that candle and things like that. So it's trying to measure whether it's just normal retail activity or is it institutional smart money that they're coming in. Okay. So usually when that happens, you will know that the direction where that is going to go. And you will see like a huge candle, 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 but then the next few candle be red, or it will be red all the way down, or red, and red, green, and then red all the way down and things like that. So I try to catch the train and things like that and get out before even it started to slow down. And one thing, if you look at, my simple strategy, if you look at anything, okay, if you see those candles going really far away from that 20 moving average, I don't care what, it doesn't matter if it's 2 minutes, 5 minutes, or 1 hour you're trading, okay? When those candles are a little far away from that 20 moving average, I don't care what other indicator is telling you, you need to get out. That's it. If you backtest that, it's almost 100% true. Anytime, if you look at, for example, you look at the 5-minute chart, and that candles go green, 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 and you look at it from the top of the candle to your 20 moving average is like this, you better get out. That's it. If you don't get out pretty soon, it's gonna go like this. Okay. And a lot of time people say, why? Well, Thomas, I thought you say that when the candle is under that 20, you're not supposed to trade. Well, there is one exception when I trade. Because the candle is moving away down, red, 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 too far from my 20, right? That's when I get into. And usually when I trade that, it's called the dead cat bounce play, okay? And so, it goes too far from that 20, it's gonna move right back, snap back right to the 20. So if you look at it, that 20 moving average is like this. It goes too far up, it's gonna snap back. It goes too far down, it's gonna snap back to that 20. Right now, if you look at your chart, you put that 20 moving average on there, and you will see that when the price is going up a little too far from that 20, it's gonna snap right back before. So it's gonna pull back right to that 20 before it makes another, higher high. If it breaks under that 20, that's when you jump off the train because very likely it's gonna go to the opposite side. So if you day trade or if you swing trade, if you're trading the 2 minutes to 5 minutes, the 1 hour, it doesn't matter. You will see that pattern repeat over and over and over again. Because before that, I never paid attention to that. I mean, I must have spent at least 20, 30,000 going to these schools, but nobody taught me that. And I didn't realize, I didn't see that until, I, play enough with it and I saw that. And even if you Google YouTube, nobody will tell you that if it's far away from the 20, you have to get out. And nobody tell you why you have to get out or the reason. But from my experience, if I've been trading at 20 for so long, oh yeah, can you put like a 20 on the chart?
Yep. Let me
Yeah, like
see.
go to a stock that maybe has some good volume or liquidity there, and put that 20
So
and that
this
50.
20 is the blue line.
Yep.
What time frame do you want to look at?
Put that maybe it's 5 minutes.
Okay, 5 minutes. Like this is what he was referring to. If it's too far from the 20, you see how it snaps back.
Yep.
So here,
Every time you get that candle way up away from that 20, it will snap back. Also to the downside. See all those red to
Mhm.
the downside? It pops right back to that 20. So that's when you can enter a trade at that low. And so if you look at that blue line, anytime it goes far from that 20, it will go right back to it. Anytime it goes too far from up, it will go right back to that 20. So don't expect it, to kind of for your stock to run forever, or for long periods of time. As a day trader, if you just put those two simple moving average on there, you will almost, I say, eliminate maybe about, if you really stick to that strategy, you probably will eliminate about 70% of your mistake, meaning that you probably have a, right there, you see that 20? What's that purple line?
purple is the 50.
All right, and then the
Then
yellow.
the yellow is the 200.
All right, so that's exactly what I was talking about. When those three moving average are very close together before they expand, you enter on that trade where that finger is right there. As soon as the candle pop right above that, I get in and I put the 8 moving average on there, so I will write the 8 moving average. And if the candle doesn't break under the 8 moving average, I will stay in. But as soon as it break, I might just decide to take 50% profit and wait to see if it's going to bounce back, from that 20. If that 20 is going to provide support, if it does provide support, it bounces right back up. I write that 50% because that's pretty much not my money anymore. It's free money, writing and making more profit.
Mhm.
So
Yeah,
as
Thomas,
you see it coming crossing that 20 under a little bit, it's kind of consolidating things like that.
Yeah, Thomas,
So
to add to your point, I noticed that I'm a longer term trader, so I stick with
Yep.
like the daily and stuff. But the thing that you just said about it snapping back, I noticed that too. I noticed it on the monthly. You notice it
Yep.
on the weekly. If it's too far from its mean, it always snaps back, and that you can go as far back as the last 20 years, and the same behavior happens. If it's
Yeah.
too far from its mean, and the thing is, that's a time tested. It's a time tested theory already. So if you see something like this, expect maybe a fall. Even if it goes down smaller to your time, like the 5 minute chart, even that still rings true. You can see it on the chart.
Yeah, and so after so many years of trade schools and seminars, they don't even tell me that until I was like, wait a minute, there's a pattern here. It repeats every time. I mean, you look at it, like I said, you look at it, doesn't matter. It's the 5 minute chart, 30 minutes chart, 1 hour, 4 hour daily chart, or weekly chart. You will see that it works on Bitcoin, it works on Ethereum, it works on Binance, it works on any crypto, Forex, anything. If you put that 20 and that 200 and put the 8 on there and you just stick to it, like I said, where that 20 just crossed the 200 and the candle popped right above that 20, that's where you get in, right there. It doesn't matter whether, what time frame you're trading, what asset you're trading. I put this on my, when I trade future. ES, same thing. I put other things on there, but that's the number one thing. I will not trade it, even if I have put on my $1,000 algorithm script that I put on. I still need to put that 20 and 200 and the 8 on there, in addition to the algorithm I'm using, okay, just to confirm things. And then I will have another screen where I have some other strategy and indicator that I use on that one, but I basically monitor the same stock that I'm trading right there, just to make sure that everything kind of confirms a convergence, a divergence of a lot of things together. So I probably use about maybe 3 different strategies and maybe 2 different algorithm that I paid for it to put on, my charts and things like that. But even those algorithm, it doesn't compare to this very simple thing. You put any stock on there, it doesn't matter whether it's Apple, SPY, whether it's Amazon, you will see the same thing again and again and again. And so to me, when I look at it, people can say, buy this stock, tomorrow it's gonna run. I look at my charts, like, wait a minute, I look at the 5 minutes and 1 hour, say tomorrow, I think it's gonna snap back. So I'm just gonna sit and wait for that pullback because it's way far from that 20.
Mhm. Yeah,
Or
Thomas,
that
I
the
think
candles are way down from that 20. And if you look at it, the RSI is probably under 30 to the 20. Well, maybe I will buy because people say, wait a minute, why would you want to buy? It's down, it's dropping way down. It's like, exactly, that's the point. But if it drops, like the RSI drop all the way down to maybe 20 or 30, but those candles are very close to the 20, no, I'm not getting in. That's pretty much dead. Right? So I will stay out. So usually when I day trade, right there's the Apple chart. When I see that the red coming all the way down, and if it's too far from that 20, I'll jump in right there and ride it a little back to the 20. And you will see that pattern that it will snap back to the 20 and then it'll go back down. It will snap back to that 20. And so I just write that, that little pullback, and size does matter, right? So Apple, I wouldn't trade Apple because I can't do like, if I use margin, but I don't want to do that. I wouldn't want to go like 1,000 share Apple at 121. I mean, I usually trade stocks that it's about $5 to about 20. And I will go in, each time I go in will be about 1 lot to 5 lot, which is about 1,000 share to 5,000 share, depends on the price of the stock. If the stock is like, $3, I might go 3-4 shares. I mean, three or four lot, which would be about 4,000 share. And usually a $1 move, 50-cent move, could be about a good easy $500 to $5,000, depending on my lot size and stuff. So my position size is very important to me, but at a minimum, I always go in 1 lot, which is 1,000 share, if your account permits you to do so. But from a technical perspective, I mean, if you just put those moving averages on that, you will see. I mean, if you're new, look at this, back test it. Your favorite stock, kid, looking back in a couple of weeks, couple of months, and you will see that pattern forming every time. And every time it forms that pattern, it will always run. And if it runs far enough from that 20, you will see that it will pull back to that 20. And if that 20 provides support, it will bounce right off of that 20 and make another higher high. And so you could take profit, when it's far away from the 20, when it's not back back to the 20, take another position, and then ride it up. Or if it drops below that 20, then that's where you got to figure out where your stop loss is, and you get out, because that 20, usually that 20 will provide support. So if it goes up too far from the 20, it will snap back to the 20, it'll make another high. Okay. Or if it break under the 20 too far and it's coming back up, that 20 is going to provide resistance. I've seen it. I traded so many times. Okay. And this is one simple strategy, but you're not going to find it on YouTube or anywhere else. You go to trade school, they will teach you all kinds of theories and this and that, which you're going to lose a lot of money. But this simple thing, it's just like too simple. Okay. And usually I call it, right on my chart, I call it the secret strategy. Okay. But now it's no longer a secret because I just reveal what strategy that I use. And so you could back test that. Doesn't matter what you do. Any stock, you put that on there. And if you find, that exact criteria where the candle is above that 20, the 20 is above the 200, okay, and you get confirmation from the candle number 2 or 3, and it's writing above that 20. If you trade that, usually, it could be a false breakout, and you want to break right under, the 20, right back down to the 200. But that's probably one of your losing trade. But most of the time when you see that pattern, it will work, but it's not easy to find that pattern. The pattern just doesn't appear magically every morning that you go into, your scanner and scanning for stock. And so I specifically set up my scanner to scan for those kind of stocks, to show me any stocks where that 20 moving cross over the 200 on a 2-minute or 5-minute, depends on what I want to trade, what time frame I want to trade. And whatever stocks that pops up, a lot of time, you have to set the limits where, your stock only bring up stock that is maybe $5 to $20. And also you want to put a filter in there where it only show you stock that is trading, at least the volume is at least a million shares or up, and things like that. Otherwise, you got too many junk penny stock showing up. And so you have to set your criteria on your scanner and scan for those stocks, because without the scanner, I wouldn't know which stock is going to meet those criteria. And so I wouldn't be able to find these kind of trades. But with the help of the scanner and other scanners that you set up, a lot of time you will see this pattern all the time. You go back test it. If the stock is dropping, you look at it. Obviously, it dropped and it's too far from that 20. It's just going to go back to the 20. It will then provide that 20 is going to provide resistance. It will drop back. So anytime the candle is under that 20, I consider that the dominant trend for that is down. And so usually I will not trade it unless those candles are dropping too far from that 20 to the downside, that I would jump in and just ride it back just before it gets to the 20, I'll jump out. Because very likely I've seen it so many times over so many years that 20 is going to provide support, and it's going to hit it, it's going to drop back. So I don't want to lose my profit as a scalper or day trade. I will get in there, maybe 2, 4, 6 candles, 2 minutes, I'm out. And I'll be taking anywhere from $500 down to about $3,000, $4,000. And my goal as a day trader is, people are so selfish and greedy. Okay? If you could just make consistently $100 a day, 5 days a week, okay? And there's about 252 days, trading days in a calendar year, because Saturday, Sundays, you don't count in some holidays, right? If you just make $100 a day, you'll be making almost like, $30,000 a year. I mean, that's like somebody's full-time job at an assembly line and stuff. So the only thing you need to do is you need to come up with at least the money, save enough so that you could have at least 25 above in your account. So you can go in and out, in and out. And so a lot of time I trade a lot. I mean, because sometimes this trade doesn't work, I get out. I minimize my loss, right? I manage my loss. And so I could do 10 trades. I lose like 5 trades. I win 5 trades. People say, wait a minute, how can you make money if you only win 5 and lose 5? Well, the 5 that I lost, my stop loss got me out, and I lost just a little money. But the 5 trades that I make money is almost double, triple my loss. And so I make money. So people understand that concept, that you could have 10 trade, lose 5 or 6, but you're still making money on the 4. So, you see the pattern I'm talking about, right? Every time it's far from the 20, it will snap right back to that 20. And that's where you get in. And then, and people's like, well, where's the support? I mean, where's the support level? I need to draw my support line. I said, forget the support line, okay? It's far from the 20, it's just gonna snap back to it. So I'm just gonna buy right there, and then it will snap back to that 20, I'm get out, that's it. I don't need where the support level is. I don't need to go back and say, figure out what the support level is. It's good to have that. I mean, I have on, my chart, automatic support and resistance level. And also I use pretty much things that will tell me certain things where the point of control is for that particular day and things like that. But a simple thing is sometimes people make it too complicated and they don't see it anymore. There's too many things on their chart and they don't pay attention to the most important thing.
Yeah, Thomas,
To read it
I
all
definitely
together,
agree with what you said.
yeah, right there,
My
that red candle. You see, it's too
yeah,
far. That red candle wasn't red; it was green. It was green before it come
yep,
down, and people don't get out because they think it's still gonna go
it's
up
gonna go
to
up.
the
Yep,
moon, right? It's not gonna
yeah,
go to the moon. It's almost like a finger from that 20. It's gonna snap back, and which it did.
hmm,
And then that
yeah,
20 didn't provide support, so it went all the way down. And it's a little fall from that 20, so it snapped back to the 20 again. So if you just trade that 20 above and below, when it's too far, take your profit. If it breaks that 20 too far to the downside, get in, ride it back to the 20, jump out, and see what it
mhm,
does. So when it's just right on that 20, I don't do anything yet until it breaks above that 20 and I get confirmation from the next candle that it's gonna go green. I'll ride it.
yeah. Definitely
You have
that's part of my trading
trading
too. But I
technical
apply that
analysts.
on the daily because I'm
Yep.
more of a swing trader than a day trader. So it's exactly how you said it. It's just different time frames, but the same thing still applies. The snapback to the 20. You see it like clockwork. You can go back as far as 20 years, and every single time, if it's too far from that 20, it snaps back, and that's what I've noticed too, and that's what I take advantage of. Uh, and when I get into my trades and when to get out of my trades. So we trade different time frames, but the terminology and most of the technicals are still the same. And that goes back to what I said earlier, where if you learn the MACD, the RSI, and the moving averages, you basically learn 80% of all the technicals that you need to learn. Everything else on top of it is just fluff.
Yeah, and so I have used like trading bots that does automatic trading for me on crypto and also on equity. But I tell you, it doesn't really work very well. I mean, to the point where sometimes I was like, it's just a waste of money. Some you pay outright a fee for it. Some you pay a subscription fee up to maybe a good $200-300 per a month using that algo automatic trading bot. But you go into that, you tweak everything the way you're supposed to. And some of these bots, you could even buy additional signals from other third party where they will, based on their algorithm, that they will send the signal to the bot, and then the bot will then use that algorithm to actually trade for you. But again, the algorithm is just like using my 20, my 200. I mean, they don't use that. They're using a different, I don't know, when you read it, they have all sorts of, things that is 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 in that algorithm. They're using probably MACD, stochastic, RSI, CCI. They're using HTR. Maybe they're using EM. they're using other things in there. Okay, and it's the same thing as putting all of that on your chart. And so sometimes even with the pay signals on top of the trading bot trades for you, it still doesn't work. And so I try that for crypto. I trade that for equity. I haven't tried it for futures yet. I'm looking at this one that it's going to cost maybe $1,200, but I'm still kind of like, forget this, because when I look at it over these many years, those simple moving averages, when I put on there that 20 and 200 and the 8, nothing beats it, really. That gives me it does not matter what the market does. It does not matter what the news says. It does not matter what it is. I look at the chart and it just tells me exactly. I could kind of feel confident where those candle is going to go in the next couple of days if I look at my chart just with those moving average on there and stuff. So that's just based on my experience, and so I'm sharing that. Um, so that maybe other traders could kind of take a look at it. It doesn't matter whether you're a seasoned trader or you're a newbie and things like that. I think this is just you use this with your other strategy, you will see that over time it's like, wait a minute, what I've been using is okay, but it seems like this seems to kind of gives me more confident in predicting, the price direction of these candles where it might go. And the other thing is, I look at it is usually the best time to get in is when those 20, the 200, the candle, and they're moving at maybe at about a 45-degree angle, right? Direction. Okay, that's the safest way. Not one that goes straight up vertical 90 degree and the candle is above that 20, but it's up almost 90 degree like that. That's more like a pump and dump thing. Okay, so I would just boom, get in, boom, get out really quick. And so like right now, like Apple, you can see that, 20 and that 15 to 200 going at a 45-degree angle. That's going to go for a long time. If you're going to go swing or long, that's you could get in there. You don't care about, the candle dropping down to the 20 under the 20, because that 45-degree angle of that moving averages is very strong, very consistent, and that's going to go for a long time unless, we have a pandemic or we have a war or something happened to Apple, got sued or something, or the Apple, phone just like, blow up in somebody's faces all over the world and they're getting sued or something, Other than that, I mean, if you look at some of those thing, it will tell you that, okay, if I'm going to go along in this one, I'll feel confident to put, maybe 30, 40, $50,000 in Apple. As far as if you look at maybe a week chart or, a 1 month chart, you will see that the Apple doesn't move 90 degree, it moves at a 45 degree. And so when I scrape the stock, if I'm gonna swing it, that's what I look for is that. But if I day trade, I could care less because I am in out in about 3 or 4 or 5 candles and stuff.
Yeah, definitely. Thank you for your insight tonight. Uh, Especially for the new guys that are learning. That's valuable information for them. So what Thomas has been saying tonight, that's gold right there. So hopefully you guys pick up from him, and he's a different view on the market, and he adds a different perspective. But hopefully he adds gold to you guys. So look, take what he has said tonight and really apply it too. Don't just take it and then say, "Oh, I'm gonna forget about it." But what? Because Thomas is a person that has been in the market for a long time, and his insight has is something I use currently, just on a different time because I'm a swing trader. But it works. You can see it works on the daily. It works on as far down as the 5 minute, maybe even the 2 minutes. But uh, you can apply it to any style that you would like, uh, depending on how big your account size is. So, all right. Let's see. Let's go to the live to see if there's any questions on there. I think I see a question from Xiong. He has he understands that it's important to be patient and wait for the charts to go as planned, but for a small account, it's hard to be patient because there's other stocks that he wants to play. So how can he get better without adding any more money? Well, Sean, to answer your question, if you want to trade and you want to practice trading, just go to a paper account. It's not going to be the same exact same feel, but we don't trade to feel stuff. We don't trade to feel excitement. That's when you start to gamble. So if you want to practice your trading without putting more money into it, or if you can't afford to put more money in it, just go to the paper trade. Or if you have Thinkorswim, go to the on-demand feature. The on-demand feature lets you play back data as it is real time, and you can practice out your strategy, apply the technicals, and it's gonna take you back. You can jump back to any date here, and just practice that. until you have it down. So not having money is not the issue. Not having patience is the issue.
Yeah, even if my account size is big, I don't trade. Like I said, I just sit there and watch because the trade doesn't meet my criteria. Why would I want to get in a trade when I know this is a strategy that is winning? But if just because somebody says get in and it looks kind of good, but it doesn't meet my strategy, why would I trade it? And so even if my account is big, I still don't trade. I mean, I can tell you that there will be mornings when I will be looking at things that I don't trade for maybe a good hour or two, but my account size, I can still, have, money in there, but I just don't trade because I can't find a stock that meets my criteria. If you want to go long, that's a different story. But obviously, if you go long, your money will be tied into that, equity, and you can't get it out anyway. So, when you go long, you look at an entry point, and so I would look into maybe the shorter time frame to see where that pullback is going to be, and then I jump in, I buy the stock, but then I put it away, I don't look at it again. And so there, I mean, if your account is small, you buy one stock, you're done. You need to wait for your next paycheck and put another $500 in.
I think we already got your question, Kachu, because we did look at SPY. If you guys have any questions, feel free to drop them in the comments or feel free to come on voice. Don't be shy. And right now we're basically over our topic. So if you guys want us to look at stocks and just different stocks and have us give our analysis of it or our thoughts on it, feel free.
And can
Or
I hop in?
Zong, yeah, go ahead.
Yeah, more general. And, I've been talking to some friends and they've been asking me, hey, like people are talking about the inflation scare and interest rates and that whole thing. How do you guys see it? And how is that going to affect, this volatility that we're having? I guess what I'm also trying to ask is kind of like, what is the relationship right now when they're talking about, increasing interest or, you're having an inflation scare? How does that affect the market overall? What should
Well,
we be looking for?
Let me take a stab at that, Kevin. So honestly, I don't know. because because I'm a trader, everything that I do is based upon what will show up on the chart. So sooner or later, it's going to show up on the chart, right? And think of it as a game of poker, right? You can make as many bets as you want before the cards show up, but you're not going to know what if you have a good hand or a crappy hand until like the first 3 cards come up, right? So for us to say that hey, it's gonna impact inflation, or it's gonna do this, or it's gonna make the market go down, that's all still a guess as to what the market's gonna do, right? Until it physically happens, we're never gonna really know. Everything is still just gonna be a guess. Everything's gonna be us going back through the charts and saying, oh, around this announcement or around this time when inflation increased, this is what happened, right? But we're never really gonna know. And as traders, I don't think we really care about that kind of news or that kind of event, because as long as there is any movement in the market, then we are good to go. Now, if we're like investors and we're investors, then yes, it could affect us a little bit. But then again, it's only going to be to a small degree. Most of the time when inflation increase, a lot of people do like to put money into the stock market because why would they put it in a bank, or why would they put it somewhere else when their money inflation is going to impact the value of their money, right? So
Right.
but Zong, do you have a take on this, or Thomas, or anybody else? Feel free to step up too.
Well, when you're looking at inflation and they're scared of inflation and or whatnot, a lot of institutions, a lot of a lot of investors who are into the fixed income. Uh, they, when bonds get over the price of your returns on equities, then they kind of switch back. Right. So if bonds are like at 2%, right? You know, that would be more than what the SPY is giving out. So they'll switch back to bonds, and when they do that, of course, you'll get pulled back on the market. So you just keep an eye on the bond rate, and because basically, if inflation ends up and you're only you're only getting return of 2 cents, then inflation's 3%. Every year you're basically losing 1% of your value of your money. So that's just the relationship between the market and bonds. If you could get more in bonds, everybody will switch over. And vice versa.
For my long-term portfolio, it depends on the equities you are holding there. I wouldn't worry about it. Like I said, when you're talking about long-term, I don't pay attention to the noise. Okay, politics, treasury yield, it's going up. So equity doesn't like what the bond side is doing. So bonds up, equities down, equities up, bonds down, or whatever. But as a long-term investor, my long-term portfolio, which I plan to retire, is I don't worry to the point where it's just inflation. If we're talking about hyperinflation, then it's a different thing where the dollar is worthless and things like that. At that time, it does not matter. Even if you have cash, cash is just paper. Okay. And so when I look at it, with all of these things, sometimes I do, look at my long-term portfolio and to see how they're doing, and maybe certain sector I might kind of sell off and then reinvest it into a different sector. But how I look at it is it doesn't matter what it's going to be happening, whether between international trade, tariffs, or other things. I look at it, say, okay, in the next 4 years, in the next 10, 20 years, what's going to be happening to the economy? Okay. I can care less whether there's inflation, it's going to go a little up, things like that. I want my stock to be in the sector where it is going to be needed and it is going to be used. And so if that is the case, my stock will go up. Okay. I'm not saying that every stock or every sector is going to go up, but I'm looking at the certain stock or certain sector that I know for the next 10 years that those stocks, I think it's going to go up, and so I put my money there. Okay. And so with all these noise, yes, it's going to go up and down, things like that. Even with Kathy Woods, her ARK ETFs was doing very well, and just like the past couple of weeks, it lost quite a bit. And she's a great stock picker, and she's a great manager of her funds and things like that. But for long term, I don't pay attention to those things because there's nothing you can do. What are you going to do? Just take your money out of the market, And even
Right.
then, when if it goes into a point where it's just not inflation but hyperinflation, then your dollar is going to be worthless, like in other countries and stuff. Which I don't think it's going to get to that point. So I'm not going to worry. And so most of my long portfolio is going to be in financial technology, so fintech. It's going to be clean energy, EVs. It's going to be in blockchain, and things of that nature. Because I know in the next 4 years to the next 10 years, that's where it's moving, especially in the EV clean energy. And so a lot of my money is in the battery, lithium charging stations, electric cars, solar energy, and all that stuff. Because obviously in the next 4 years, Biden is in that. He's a clean energy guy. And so in the next 4 years, that's where it's going to be. And also, if you look at it just overall, I think that's where thing is going to go. Because if you pay attention, some of you might not know, but I'm an attorney. So I've been practicing law for about 26 years. And I pay attention to some of these laws, and some of these states, at least 12 states, have regulation, all right, that says by 2035, those 12 states, they have to be, all the vehicle has to be, zero emission free or pretty much electric. So if you're looking at it, it's 2021, so we're on 2035, we're talking of another 14 years. 12 of these states, all the car can't be gas, okay? It's got to be all electric, emission free. So if you put your money in EV stocks, charging stations and things like that, in the next 12 years, it does not matter what's going to happen, because all of these cars that we're driving on the street, it's going to be electric. And so where are they going to charge your car? I mean, you go to the gas station, there's no gas, because there's obviously those gas stations is going to be charging station. And also some of these technology where they're having these charging station right in your, on your property, in your house, where you charge your car overnight and you pay for just like electricity, but things like that. And so these company with these technology is going to be huge in the future. And so I'm looking at it, from a fundamental perspective, that in the next, by 2035, at least 12 of these states is going to be all electric. And so what company is going to serve, that? Because they're not just talking about the possibility, okay? They are already coming out with the law is in the book already, all right? And so by 2035, you can't have gas car anymore in those states. And so just like with the marijuana, cannabis right now, right? People are talking about Biden and Kamala Harris thinking about legalizing marijuana on a national level. Well, they're just thinking about it. They're talking about it, okay? But it hasn't happened. But at least, 10 or 12 states already legalized marijuana for recreational purposes. So obviously, cannabis is also a play. And so cannabis could be one where if you find one that, you're willing to risk some money, like I throw almost like 20,000 in a cannabis stock that is a penny stock, okay? But I think if that penny stock does well and they actually legalize marijuana on a national level, I mean, that penny stock is going to be at least, $5, $10, just like, SNDL, okay? But that's not the stock I'm in. It's a different one. It's just even a penny. But even if you invest early in SNDL and you bought it when it's like 20 cents, boy, you're making a killing. It's like, 3, 4, even went up to like a high of 4 or something. You drop back to about whatever. And so these are some of the things. I mean, sometimes you want to build wealth, okay, and you go long term, but then sometimes you have to risk on these penny stock, which you hope that the stock could do well and the company will grow, and then that would be the next Amazon, or that would be the next Netflix company or something like that. So I have a mix of many things, but to answer your questions, I mean, nobody really knows, but from my perspective, I'm not worried about my strong portfolio, because I throw it in the sector that I know in the next 4 years and 10 years, it's just gonna grow, because it does not matter where, Biden and his administration, what they're gonna do, and whatever the feds, I don't care whether they're gonna raise interest rate or whatever it is might be doing, but no matter what, I know that at least 12 states, all of the gas car is going to be gone. It's going to be electric. And so I'm just putting my money where I know in the next 10 years where I think it's going to be. And so I wouldn't worry too much about that. But by the time, if everything crash, hey, what can you do?
Hopefully that answers your question, Kevin. Good question, by the way.
Yeah, thank you all. Thank you all for your input. I appreciate it.
But one thing I mean, on the forum, I've seen it too, but a lot of people don't like crypto, but me personally, I mean, if you look at some of my YouTube videos and things like that, early 2000, I had some videos that was out 2018 where I'm already using Bitcoin to buy coffees and at Starbucks and things like that, when people don't know what the heck it is, what it is. And sometimes right now, even people who are in crypto don't even know that they can use their Bitcoin to buy coffee, at Starbucks. Just like, how do you do that? Starbucks doesn't accept Bitcoin. It's kind of like, well, then you don't know, you don't really know crypto. Okay, if you can't even spend your crypto at, Starbucks, because I can do that. I went to Fogo de Chao. I had a dinner there, and I paid, my dinner with, BNB. It's like, well, how do you do that? Because what with the child doesn't accept crypto? It's like there's ways, okay? So
How
if
much
you
did
don't
that coffee cost
say
today?
you are a crypto guru, I say no, you don't know nothing yet, and stuff like that and stuff. So for me, I think that blockchain is going to be the thing of the future, and so I am heavily invested in some of these companies, right? And they are also on the stock market, not just in crypto. And what I believe, I mean, if let's in I say about probably just 5 years, if you look back to see if this is going to right, my prediction is going to be right, is that everything is going to be digitized. Okay, money, okay, wherever you go, it's going to be crypto. And also your driver's license is going to be in your phone on the blockchain. Your passport is going to be in your phone on the blockchain. Your birth certificate, probably your educational certificate, like your bachelor, your master's, your PhD, it's going to be on your phone, on the blockchain with a QRC code. Even your COVID-19 health status, okay, it's going to be on your phone, okay. And so when you travel overseas, they want to see a QR code where they scan, and they know whether you got tested just 2 days ago and you're negative, or whether you've been vaccinated and when, and by which authority that basically certify that you've been vaccinated with the COVID-19. Okay, and I truly believe that next, if you look at South Korea, they just did a experiment where I think at least somewhere about 1 million people volunteer, and their driver's license now is on the blockchain on their phone, so they're not carrying that plastic card anymore. Cops pull you over, you just open up your phone, have a QR code, and they scan it. There it is. Everything, your fingerprint, your face, your date of birth, your birthday, everything's on there. All right. And the thing is that voting, it's going to be on the blockchain, because right now some of the problems we're having is voting, right? Voting fraud, voting fraud. They can easily give you and I, any U.S. citizen who has a birth certificate, who has a passport, who's a U.S. citizen, they are given a number, and basically their fingerprint and their facial recognition is on their phone, and they could just vote, Biden, Trump, whatever, on your phone. And once you go register once, you get that credential and you can vote, and there is no voter fraud, because you can't hack into the blockchain and try to do something with it, right? And so I think that in the future, all of our ID and credential is, and our health status is going to be on the blockchain. And so if you invest in some of these companies that it's going that way, it could be big. Just even the simple thing, okay? Simple thing like SOS or Riot, these are just blockchain where they just mine Bitcoin, but look at their stock. I mean, I recommended, Riot blockchain to one of my buddy, and he didn't buy it. He's like, hey, wow, you recommended to me, it's under $1. Now it's like some, whatever, 20 something, and so blockchain, even, simple things like that. But I'm not even talking about simple thing like, mining Bitcoin and things like that, these companies. I'm talking about a company that is developing, a blockchain where they have their own ledger, and they have their own tokens, and also they have everything built in, where there is a company right now, I don't know if you guys know, but they are building an app just like an Amazon app, okay? And what they have on there is that you could be a seller, you could be a buyer, you could use Visa, MasterCard, you could use crypto. You could send money to, overseas using, basically sending the crypto, convert it into local currency, right? And so that app, once that app launch, which is in about a month or so, I think it's going to go crazy. And I think people is, maybe the US might not use it, but other country, they're going to start using it, just like Bitcoin and other crypto, where the US has so much regulation and a lot of companies don't know what to do here in the US. But if you look at, overseas in Switzerland, in South Korea, in Japan, and other countries, we're way behind. Like in Singapore, we're just way behind. Like even in Thailand, you will see these ATM, you will see these currency exchange at certain airport or station where you can just check your exchange your Bitcoin for local currency now, and you don't even have to carry US dollar over to Thailand and change the US dollar to Thai baht. You just go over there with your phone and then you just say, hey, I want to exchange one Bitcoin for a Thai baht. And, that's like, whoa, that's a lot of money. It's like 50 grand, that's like a 50 grand. That's like almost 1.2 million baht or something, Um, and so these are the things that I look for. I'm looking just like Kathy Wood. She's looking for disruptive technology, and that's what I'm looking for too. And so I'm looking to invest in technology, not just in crypto, but in technology here in the U.S. Where it is going to disrupt an industry, which is the vehicle is going to be all electric by law, 2035. And so all of these technology that is going to build things to serve that economy is going to be huge. And so that's going to be the next Amazon for me. So that's what I look for. So I don't care about the noise. People talking about the treasury yields going up, equities going down, inflation, we print too much money. In the past year, we printed more money than we printed, our debt is just kind of like, it's ridiculous. I mean, and a lot of times people don't even know what the Federal Reserve, they don't even know what that entity is. They thought that that's a government agency. It's not. If you really look at it, the Federal Reserve, it's not a government agency. It's a private agency. Okay. You say, wait a minute, but didn't Trump appointed, the chair? Yes, the law says the president appoint the chair of the Federal Reserve, and he can only fire the chair for cause. But he's got no control over the chair anymore. And also, once the chair gets over there, there's a whole bunch of board, and all of those board members, along with the chair, they control the monetary policy, and the U.S. government can't do a damn thing. Congress can't do anything. President can't say and tell them what to do. They're president. They do what they want. All right. They're not a government agency. Congress, you know, has certain things that they can, um, do, like even like Zuckerberg, all right, Facebook, this issue. Yeah, they can always, subpoena him to come in and testify about certain things. Same thing with the Fed chair and other things. But they are a private agency. If they act within the law, there's nothing you can do. And so that's why they could just inject trillions of dollars without Congress approval. The Fed just did that into the market. They're trying to manipulate, to try to control monetary issues, and that's why a lot of rich people, they know what the heck is going on, and so a lot of rich people, they're parking their cash overseas somewhere else. I mean, people don't even pay attention to these kind of things. But right now, I mean, the U.S. is not going to go anywhere. I mean, the country is just not going to go down the drain, and the stock market is just going to go to zero. I don't believe that's going to happen. And so, yes, a lot of the stock is going to, tank, but then you have to find out what sector is going to tank and what sector likely will not be affected, and it's actually going to go up, just like the COVID. For some reason, if you go to my Facebook and look at some of my posts, I actually predict that 2021 there's going to be a recession and a crash. And so, the COVID actually helped accelerate that. And so, and usually, if I don't know if you guys pay attention about the inverted yield curve. I was talking about that, and I was afraid of that. And I know that there might be some sort of a market recession and things gonna tank. So I put a lot of money on the side. So probably about almost like 80%, I turned my portfolio into cash and sitting there. All right. And so when COVID hit, I was just like, my God, this is it. I pour everything right back in and stuff. And that's just like, for me, 2020, it's the pandemic. It's bad for everything, but um, it's actually the best thing that ever happened to me. Really, it's almost like wealth transformation where poor people can actually become rich if you are at the right time, with the right cash sitting on the sideline, and things like that. And maybe right now, maybe it might be to the point where, if you look at it, Warren Buffett, indicator that, we're in a bubble. There's a chance that it might pop. Who knows? Maybe now it's a time where if you look at February 2020 up until now, maybe, there's a lot of profits. So I might want to take it into cash and then maybe hold on, and there might be another pop somewhere where it dropped. Who knows? But again, a lot of the stock that I pick are in some of the sectors where I'm kind of confident that I'm low turn on it. So even, maybe in a year or two, things tank, but then I'm just gonna dollar cost average and put more money in there. I look at it as a buying opportunity. So if there's a stock that I really like, that's what I'm gonna do. And so when it tank, I just like, yes, discount, just buy more. Even though I look at my portfolio, I don't like it. It went red, I lost money, but hey, I know, because fundamentally I look at that stock. I like the company. Nothing has changed. Okay. Last week and this week, nothing has changed other than, oh, inflation, this and that, and news and that and that. And so it went down. It's just kind of, wait a minute. Fundamentally, the company is still profitable. There's no lawsuit. Nothing has changed. The company is still good. Well, people just panic. They sell. I just buy the share cheap. That's how I look at it for long term. But as a day trader, I even like it when the stock, is very volatile like this. That's how I make money. Stock goes up, it goes down. That's the best time as a day trader to make money. I mean, for the past 2 weeks, I'm just smiling because, some of these stocks, and there's a lot of short opportunity on the ES. I mean, you look at the chart, it's like at least 10, okay, in the past week, short, and then also go long, those mini, 10 point, 20 point, on the ES and things like that. So you have to find a way how to make money. It doesn't matter whether the stock goes. The only time I wouldn't make money if the stock goes sideways. And so this is how I look at it. The stock market only move in 3 directions: up, sideways, and down. Sideways, I don't like it because there's nothing I can do. But I like it when it goes up. I like it when it goes down. And you have to find a way, a strategy on how to make money when the money go up, when the stock goes down. But when it consolidate, you just sit there. It's time out, break time. Anyway. Yeah, I talked too much. Sorry about that.
No, it's great. It's great.
No,
Thank
we
you
like
for
that.
coming on tonight. Yeah, it makes less work for us. So yeah, thank you. You should come on more so we don't have to do so much talking. But you exactly said everything that we would say too. So thank you for coming on tonight.
Oh yeah. It's great that everybody, joins in on the conversation. Even a lot of the quiet guys, just join in. It makes everything, more interactive, and we all learn from each other.
Even if you are wrong, don't be afraid. Trust me, I'm wrong all the time. So just come up and talk with us. We want this session to be more of like a conversation that we can have between all experience level. You don't have to be an expert to know. And the best way to learn is to just express what you are thinking, ask questions, and if we can answer it, that's one thing that you don't have to go look for. Or if you know something and you want to express what you know also, feel free. But it is getting late and we're about at the end of our session. So I hope that you guys take away a lot of good things from this session this Sunday night. And for sure, I have. Any last comments? Any last questions that we can answer?
Yeah, and don't be afraid to ask the question if you think it's a dumb question or not. There's no dumb question, right? The only one is the one that you don't ask. Right? So, feel free to just ask any question that you have desire to know.
Okay. Doesn't look like anybody wants to talk, but with that, thank you everybody for joining us, and a big thank you to Thomas. You did a lot of talking tonight, so and thank you for. I hope you join us every Sunday or whenever you can. And if you haven't gotten the link yet, Zong can forward you the link to our Discord, and come join us in there too throughout the week. And feel free to share that link around and. That way, we get more people, more like-minded people to help us all grow and share ideas.
Sure. Yep. I'm happy to be a part of discussion tonight and stuff, and I'll try to join more in other groups and stuff. But most of my time, I'm right now, pretty much kind of like probably I will be retiring at the end of this year or probably next year for sure. And so I've been doing a lot of research and stuff. Trying to even with all of these things already. I always trying to my time at least 2-3 hours um, you know, every night to try to find out, is there a better strategy? Is there a secret, indicator, or is this or that? And is there a better way of how to scan for these stocks? What are other people doing? Do they have like a strategy that they're not telling me that I can use to trade? And things like that. So I'm always doing research. I'm a little busy on that side because I think in order to be really good at what you do, you constantly have to update your skills and learn more and more and more and just keep looking and things like that. And so, yes, I will try to, participate, more in maybe joining this, Discord group and then join in more of these kind of meetings and things like that. And like I said, I mean, even with people who are new, it's you participate, and sometimes people will ask you questions that make you think, like, oh, wait a minute, yeah, I don't know the answer to this question, so I'm missing something. If I can't answer that question, that is a good question. So I need to go find out and research and find that out because that's missing. So you will always learn something new all the time by joining a group or engaging in discussions and things like that. The only time that you will not learn anything is if you're not joining or you're not participating or people are not really teaching you and they're not telling you things and things like that. And sometimes I go into these group where sometimes I feel like that where they don't disclose things, they don't give you good information. You ask them about, what are you doing, what indicator you're using, what stock you you are in your portfolio that you think is probably your number one. They won't tell you. Kind of say, wait a minute, is that a secret or what? It's just kind of like thing. So I'm glad that this kind of discussion kind of open things up where people talk about their ideas and just throw things out there because that's how you learn. You learn by asking, you learn by listening. So I'm happy to be a part of this group. So
And Thomas, a few of the questions in the chat window asks if it's fine if they contact you. What's the best way they can get in contact with you?
Yeah, they could just probably go to Facebook and then just search for Thomas Yang and then just send me through Messenger there. I check that from time to time. But because there's so many people on there, sometimes I have buddies, family, sometimes they message me there and I might not get to it right away. But that's probably the best way right now is just to go to Facebook and then look me up and then message me using Messenger.
Okay. It's like there's no more questions. So, all right, we will end things here. Thank you everybody for joining us, and let's have a good week next week. So,
Right.
best of luck.
All right. Yeah.
Good night, everybody.
Night, everybody.
All right, guys. Thank you.